Imagine waking up and finally seeing Florida home listings give buyers a little breathing room. After years of runaway prices, bidding wars, and impossible affordability, the market is starting to cool. Statewide prices are already down more than 5% from last year, and most major forecasts suggest 2026 could bring even more softening. So the big question is simple: is this the Florida housing reset buyers have been waiting for, or just a temporary pause before prices rise again? Let's break down what's really happening using the latest numbers from Zillow, Redfin, and Realtor.com here in early 2026. Starting with the statewide picture, Zillow's Home Value Index now sits around $372,000. That's a 5.3% drop year over year, which may not sound dramatic, but it's a major shift for a market that barely dipped even during national slowdowns. Redfin's data tells a similar story, with median sale prices hovering around $405,000 and homes taking significantly longer to sell. In many Florida markets, properties are sitting for roughly 80 days before going under contract, compared to barely 30 to 40 days at the peak. Inventory is another key signal. In several metro areas, supply has climbed to nearly 7 months. That pushes Florida out of a seller-dominated market and closer to balance, or even a buyer's market in certain pockets. And the reasons behind this shift go far beyond mortgage rates alone. One of the biggest pressures right now is insurance. In storm-prone parts of the state, annual homeowners insurance premiums are now commonly $6,000, $8,000, or even $10,000 and higher. For many buyers, especially retirees and middle-income families, that extra cost alone is enough to kill affordability even if home prices dip. At the same time, population growth into Florida has slowed compared to the pandemic surge. Some residents are relocating to lower-cost states, investor activity has cooled sharply, and foreclosures are slowly rising as adjustable expenses catch up with stretched homeowners. Put together, it creates steady downward pressure on prices. Now let's zoom into specific cities, because this correction is not happening evenly. Starting with Cape Coral and Fort Myers, this region has been hit the hardest so far. Typical home values are sitting around $360,000, and Realtor.com is projecting a steep 10.2% decline in median prices for 2026. Hurricane damage, unfinished developments, rising insurance costs, and investor pullback are all weighing heavily here. If current trends hold, median prices could realistically slide closer to $315,000 before finding a floor. Moving north to the North Port, Sarasota, and Bradenton area, prices remain higher, around $450,000, but cracks are forming. Year-over-year values are already slipping slightly, and forecasts point to nearly a 9% decline in 2026. Coastal properties in particular are seeing longer listing times as buyers hesitate over insurance costs and future storm risk. In the Tampa and St. Petersburg metro, the story is more mixed. Typical values are around $400,000, with prices already down 4 to 6% in some neighborhoods. Forecasts suggest milder softening ahead, maybe another 3 to 4% in 2026. Storm exposure, rising HOA fees, and homeowners with thin equity margins are keeping the market cautious, especially in outer suburbs. Orlando is holding up better than most. Prices are still around $400,000, with smaller year-over-year declines in the 2 to 4% range. Analysts expect mostly flat pricing or slight declines going forward as tourism stabilizes and remote work migration slows. It's less dramatic here, but the days of rapid appreciation appear to be over. South Florida tells a different story. In Miami and Fort Lauderdale, Zillow shows average home values near $571,000, down about 3% year-over-year. Realtor.com forecasts roughly a 2% decline in 2026 overall, but condos are taking the biggest hit due to rising association fees, insurance costs, and new regulations. Luxury single-family homes, however, remain relatively resilient thanks to cash buyers and international demand. Other metros like Jacksonville and Daytona Beach are expected to see modest 2 to 4% softening, reflecting slower growth rather than a sharp correction. projects an average 1.9% price drop across Florida's largest metro areas in 2026. Redfin highlights longer selling times, insurance costs, and affordability as the biggest drags on demand. This doesn't look like a full housing crash, but it does look like a meaningful reset after years of excess. If mortgage rates ease towards 6% and insurance reforms make progress, stabilization could begin in late 2026 or early 2027. Until then, patient buyers, especially in Southwest Florida, may find real opportunities as sellers adjust expectations. Are you buying now, waiting it out, or staying on the sidelines? Drop your take in the comments. If you're tracking Florida real estate and want more city-specific forecasts through 2026, hit subscribe and turn on notifications. Thanks for watching, and I'll see you in the next one.